Question 1. Which of the following describes the primary responsibility of a Series 99 operations professional? A. Providing investment advice to retail clients. B. Executing trades on behalf of institutional investors. C. Ensuring the accurate and efficient processing of transactions and maintaining compliance with regulatory requirements. D. Managing the firm's proprietary trading desk. Answer: C. Ensuring the accurate and efficient processing of transactions and maintaining compliance with regulatory requirements. Explanation: the primary responsibility of a Series 99 operations professional is centered on the back-office functions of a broker-dealer. This includes ensuring that all transactions, from trade execution to settlement, are processed accurately and efficiently, while also maintaining strict adherence to all relevant regulatory requirements. They are crucial in mitigating operational risks and safeguarding customer assets. Their role is distinctly separate from client-facing advisory services or proprietary trading activities, focusing instead on the integrity of the firm's operational processes. Question 2. A customer sells 100 shares of XYZ stock in a cash account. What is the standard settlement cycle for this transaction? T+0. B. T+1. C. T+2. D. T+3. Answer: B. T+1. Explanation: effective May 28, 2024, the standard settlement cycle for most equity, corporate bond, and municipal bond transactions in the U.S. moved from T+2 to T+1. This means that the transaction must be settled, with the delivery of securities and payment, by the first business day following the trade date. This accelerated timeline aims to reduce systemic risk and increase market efficiency. Operations professionals must ensure all back-office procedures are streamlined to meet this shorter settlement period. Question 3. Which document is considered the most critical record for verifying the ownership of securities held by a broker-dealer for its customers? Customer ledger. B. Trial balance. C. Stock record. D. General ledger. Answer: C. Stock record. Explanation: the stock record is the most critical document for verifying the ownership and location of all securities held by a broker-dealer, whether for customers or the firm itself. It provides a daily detailed accounting of every security position, showing where each security is located, e.g. in safekeeping at a transfer agent or pledged to a bank. This record is essential for compliance with segregation requirements and for ensuring the firm can account for all customer assets. Maintaining an accurate stock record is a fundamental operational responsibility. Question 4. Under FINRA rules, how long must a broker-dealer generally retain records of customer account statements? 3 years. B. 5 years. C. 6 years. D. Indefinitely. Answer: C. 6 years. Explanation: FINRA Rule 4511, General Requirements, mandates that most broker-dealer records, including customer account statements, blotters, and ledgers, be retained for a minimum of 6 years. This retention period is crucial for regulatory oversight, audit trails, and resolving potential customer disputes. Operations professionals are responsible for implementing and overseeing systems that ensure these records are properly maintained, archived, and readily retrievable for the required duration to meet compliance obligations. Question 5. What is the primary purpose of a broker-dealer's anti-money laundering (AML) program? A. To detect and prevent insider trading activities. B. To protect the firm against cybersecurity threats. C. To detect and report suspicious activities that may indicate money laundering or terrorist financing. D. To ensure the firm maintains adequate net capital. Answer: C. To detect and report suspicious activities that may indicate money laundering or terrorist financing. Explanation: the primary purpose of a broker-dealer's anti-money laundering (AML) program is to detect and report suspicious activities that could be indicative of money laundering or terrorist financing. This is a critical regulatory requirement under the Bank Secrecy Act and the Patriot Act, enforced by FINRA and FinCEN. Operations personnel play a vital role in identifying unusual transaction patterns, adhering to Know Your Customer (KYC) procedures, and reporting suspicious activity reports (SARs) to prevent the financial system from being used for illicit purposes. Question 6. Which of the following best describes a fail to deliver in a securities transaction? A. The buyer fails to make timely payment for purchase securities. B. The seller fails to deliver the securities by the settlement date. C. A broker-dealer fails to execute a customer's order. D. A customer fails to meet a margin call. Answer: B. The seller fails to deliver the securities by the settlement date. Explanation: a fail to deliver occurs when the selling party in a securities transaction does not deliver the purchase securities to the buying party by the agreed-upon settlement date. This can happen for various reasons such as insufficient shares in the seller's account or operational errors. Fails to deliver can create risks, including market exposure and the potential for a buy-in to force settlement. Operations professionals are tasked with monitoring and resolving these issues promptly to ensure timely and accurate settlement. Question 7. In a delivery versus payment (DVP) account, when does the transfer of securities and funds occur? A. Payment is made before securities are delivered. B. Securities are delivered before payment is made. C. The transfer of securities and funds occurs simultaneously. D. Only the securities are transferred. Payment is handled separately by the customer. Answer: C. The transfer of securities and funds occurs simultaneously. Explanation: in a delivery versus payment (DVP) account, also known as a cash on delivery (COD) account, the transfer of securities from the seller to the buyer's account and the corresponding payment from the buyer to the seller occur simultaneously. This mechanism protects both parties by ensuring that payment is received only upon delivery of the securities and vice versa. DVP accounts are commonly used by institutional clients and reduce counterparty risk for both the broker-dealer and its customers. Operations departments manage the intricate coordination required for these simultaneous exchanges. Question 8. What is the purpose of the Securities Investor Protection Corporation, SIPC? A. To regulate broker-dealers and ensure market fairness. B. To protect customers against losses due to fluctuations in security prices. C. To protect customers against the loss of cash and securities held by a failed broker-dealer. D. To provide insurance for investment products like annuities and mutual funds. Answer: C. To protect customers against the loss of cash and securities held by a failed broker-dealer. Explanation: the Securities Investor Protection Corporation, SIPC, protects customers against the loss of cash and securities held by a failed broker-dealer, up to $500,000 per customer, including $250,000 for cash. SIPC does not protect against market losses or fraud perpetrated by issuers. Its role is to restore customer assets when a member broker-dealer goes out of business. Operations professionals must understand SIPC coverage limitations and ensure proper record-keeping to facilitate any claims process should a firm fail. Question 9. Which of the following is not typically considered a back-office operations function? A. Trade confirmation and settlement. B. Customer account maintenance and record-keeping. C. Developing new financial products. D. Regulatory reporting and compliance monitoring. Answer: C. Developing new financial products. Explanation: developing new financial products is typically a function of product development, sales, or investment banking departments, which are generally considered front office or middle office activities. Back office operations primarily focus on the administrative and support functions that ensure the smooth and compliant execution of transactions. This includes trade confirmation, settlement, customer account maintenance, record keeping, and regulatory reporting, all crucial for the firm's efficiency and integrity. Question 10. A customer initiates a transfer of an account from one broker-dealer to another. What is the name of the system designed to automate this process? A CATS. B. Trace. C. OAS. D. EMMA. Answer: a CATS. Explanation: the Automated Customer Account Transfer Service, a CATS, is a system developed by the National Securities Clearing Corporation, NSCC, that automates and standardizes the transfer of customer accounts from one broker-dealer to another. A CATS ensures an efficient and timely transfer of assets, streamlining what could otherwise be a complex manual process. Operations professionals are responsible for managing these transfers, ensuring all necessary documentation is complete and that the transfer adheres to regulatory timelines, typically within 3 business days after validation. Question 11. What is the primary role of the Depository Trust and Clearing Corporation (DTCC)? A. To regulate the securities markets. B. To facilitate the clearing and settlement of securities transactions. C. To provide investment banking services. D. To manage mutual fund portfolios. Answer: B. To facilitate the clearing and settlement of securities transactions. Explanation: the Depository Trust and Clearing Corporation (DTCC) is a critical component of the U.S. financial market infrastructure, primarily facilitating the clearing and settlement of securities transactions. Its subsidiaries like NSCC and DTC centralize the processing of trades, reducing risk and increasing efficiency through services such as continuous net settlement and book entry transfers. Operations professionals rely heavily on DTCC services to ensure the accurate and timely settlement of trades and the custody of securities, making it a cornerstone of post-trade operations. Question 12. Which of the following is a key operational control to prevent unauthorized access to customer accounts? Implementing aggressive sales targets for registered representatives. B. Requiring strong passwords and multi-factor authentication for online access. C. Sending marketing emails to dormant accounts. D. Outsourcing all IT functions to a third-party vendor. Answer: B. Requiring strong passwords and multi-factor authentication for online access. Explanation: implementing strong passwords and multi-factor authentication, MFA, is a key operational control to prevent unauthorized access to customer accounts. These measures significantly enhance security by requiring users to provide multiple forms of verification before gaining access, making it much harder for malicious actors to compromise accounts. Operations departments are responsible for establishing and enforcing robust cybersecurity protocols to protect customer data and assets. This is a crucial aspect of operational risk management in today's digital environment. Question 13. A broker-dealer must report transactions in municipal securities to which system? OIS. B. Trace. C. RTRS. D. EMMA. Answer: C. ART. Explanation: broker-dealers must report transactions in municipal securities to the Real-Time Transaction Reporting System, RTRS, which is operated by the Municipal Securities Rulemaking Board, MSRB. RTRS facilitates transparency in the municipal securities market by capturing transaction data. While EMMA, Electronic Municipal Market Access, is a public-facing website for municipal market information, RTRS is the system for broker-dealer reporting. Operations professionals are responsible for ensuring timely and accurate submission of municipal trade data to RTRS to meet MSRB regulatory requirements. Question 14. What is the primary concern for an operations department when a broker-dealer receives a physical certificate for a security? A. Ensuring the certificate is immediately sold. B. Verifying the authenticity of the certificate and its proper custody. C. Determining the current market value of the security. D. Forwarding it directly to the customer without record keeping. Answer: B. Verifying the authenticity of the certificate and its proper custody. Explanation: when a broker-dealer receives a physical certificate for a security, the primary operational concern is to verify its authenticity and ensure its proper custody and safekeeping. Physical certificates carry inherent risks such as loss, theft, or forgery, which are largely eliminated with book entry securities. Operations must meticulously record the receipt, verify the transferability, and either deposit it with a depository like DDC, for immobilization, or secure it in a vault, adhering to strict internal controls to prevent fraud and ensure accurate record keeping for customer ownership. Question 15. Which regulation governs the extension of credit by broker-dealers to customers for the purchase of securities? Regulation SP. B. Regulation T. C. Regulation NMS. D. Regulation FD. Answer: B. Regulation T. Explanation: Regulation T, established by the Federal Reserve Board, governs the extension of credit by broker-dealers to customers for the purchase of securities on margin. It sets the initial margin requirements, determining the percentage of the purchase price that customers must pay with their own funds. Operations departments are responsible for monitoring customer margin accounts, calculating margin calls, and ensuring compliance with Reg T's payment and maintenance requirements. Understanding and enforcing Regulation T is a fundamental aspect of managing margin accounts. Question 16. What is the consequence if a customer fails to meet a Regulation T margin call by the required deadline? A. The broker-dealer must immediately close all of the customer's accounts. B. The broker-dealer may extend the payment period indefinitely. C. The broker-dealer must sell out securities in the account to satisfy the call and may freeze the account for 90 days. D. The customer is charged a penalty fee, but no other action is taken. Answer: C. The broker-dealer must sell out securities in the account to satisfy the call and may freeze the account for 90 days. Explanation: if a customer fails to meet a Regulation T margin call by the required deadline, typically T+4 or T+5 depending on extensions, the broker-dealer is obligated to sell out securities in the account to satisfy the call. Additionally, the customer's account may be frozen for 90 days, meaning they can only engage in cash transactions for new purchases during that period, and all sales must be prepaid. Operations departments are responsible for monitoring margin accounts, issuing calls, and initiating timely actions to enforce Reg T requirements, ensuring the firm adheres to credit regulations and mitigates risk. Question 17. Which type of account allows a customer to purchase securities with borrowed funds from the broker-dealer? Cash account. B. Margin account. C. Custodial account. D. DVP account. Answer: B. Margin account. Explanation: a margin account is the type of account that allows a customer to purchase securities with borrowed funds from the broker-dealer, using the securities themselves as collateral for the loan. This leverage can amplify returns but also magnify losses. Operations professionals are responsible for the administration of margin accounts, including setting up the margin agreement, calculating initial and maintenance margin requirements, and managing margin calls. They ensure compliance with Regulation T and the firm's own margin policies. Question 18. What is the purpose of a blotter in a broker-dealer's operations? A. To provide a summary of all customer complaints. B. To record original entry transactions on a daily basis. C. To track the performance of proprietary trading activities. D. To document the firm's business continuity plan. Answer: B. To record original entry transactions on a daily basis. Explanation: a blotter is a record of original entry for transactions, capturing all daily activities such as purchases and sales of securities, receipts and disbursements of cash, and other transaction-related information. It acts as a chronological ledger for all financial movements within the firm. Operations professionals rely on blotters to reconcile daily activities and ensure the accuracy of all subsequent accounting records. Maintaining accurate blotters is a fundamental regulatory requirement for broker-dealers, crucial for audit trails and compliance. Question 19. Under FINRA Rule 3210, if an associated person opens an account at another financial institution, what is generally required? A no notification is necessary as long as it's not at their own firm. B. They must obtain written consent from their employer before opening the account and provide duplicate statements. C. They only need to verbally inform their manager. D. They must have the external firm get approval from FINRA directly. Answer: B. They must obtain written consent from their employer before opening the account and provide duplicate statements. Explanation: FINRA Rule 3210 accounts at other broker-dealers and financial institutions generally requires an associated person to obtain their employer broker-dealer's written consent before opening an account at another financial institution where securities transactions may be affected. Furthermore, the associated person must arrange for the employer firm to receive duplicate confirmations and account statements for the external account. This rule is designed to enable the employer firm to monitor for potential conflicts of interest, prohibited activities, and ensure compliance with firm policies and regulatory standards. Question 20. Which of the following describes the operational process known as reconciliation? The process of negotiating trade terms between buyers and sellers. B. The process of matching and comparing internal records with external statements or other internal records to ensure accuracy. C. The process of liquidating a failed broker-dealer's assets. D. The process of onboarding a new customer. Answer B. The process of matching and comparing internal records with external statements or other internal records to ensure accuracy. Explanation. Reconciliation is a critical operational process involving the matching and comparing of different records, such as internal ledger entries against bank statements, customer statements against the stock record, or trade details with clearing firm statements. Its purpose is to ensure the accuracy and consistency of financial data, identify discrepancies, and prevent errors or fraud. Regular reconciliation is fundamental to maintaining accurate books and records, managing operational risk, and complying with regulatory requirements. Any differences uncovered must be investigated and resolved promptly. Question 21. What is a corporate action, from an operational perspective? A. Any action taken by the corporate board of directors. B. An event initiated by a public company that affects its shareholders and/or bonds. C. A lawsuit filed against a corporation. D. The annual meeting of shareholders. Answer B. An event initiated by a public company that affects its shareholders and/or bonds. Explanation. From an operational perspective, a corporate action is an event initiated by a public company that affects its shareholders and/or bonds. These events include stock splits, dividends, mergers, acquisitions, tender offers, and rights offerings. Operations departments are responsible for processing these actions, which involves notifying customers, ensuring proper crediting of shares or cash, managing entitlement tracking, and updating customer accounts accurately. Effective corporate actions processing is complex and critical for maintaining accurate customer holdings and delivering entitlements in a timely manner. Question 22. What is the primary objective of a broker-dealer's business continuity plan, BCP? A. To develop new marketing strategies for client acquisition. B. To ensure the firm's ability to resume critical operations promptly after a significant business disruption. C. To manage daily trading activities and execute customer orders efficiently. D. To minimize tax liabilities for the firm and its clients. Answer B. To ensure the firm's ability to resume critical operations promptly after a significant business disruption. Explanation. The primary objective of a broker-dealer's business continuity plan, BCP, is to ensure the firm's ability to resume critical operations promptly and efficiently after a significant business disruption, such as a natural disaster, power outage, or cyber attack. A robust BCP outlines procedures for data backup, alternate communication methods, and recovery sites to protect customer assets and critical records. Operations professionals are integral to the development, testing, and implementation of the BCP, as it directly impacts the firm's ability to process transactions and serve customers during emergencies, a key regulatory requirement. Question 23. When opening a new account for a customer, which of the following is not required on the new account form? A. Customer's name and address. B. Customer's financial goals and risk tolerance. C. Customer's social security number or tax identification number. D. A photograph of the customer. Answer D. A photograph of the customer. Explanation. While customer's name, address, tax ID, and financial information are all critical requirements for opening a new account under FINRA and Bank Secrecy Act rules, a photograph of the customer is not typically required. New account forms aim to gather sufficient information to verify identity, establish suitability, and meet anti-money laundering (AML) regulations. Operations professionals are responsible for ensuring that all required information is accurately collected and verified before an account can be opened and transactions initiated, but a photo falls outside these standard requirements. Question 24. Which of the following best describes the characteristics of a good control location for customer securities under regulatory rules? A location where the firm's proprietary trading desk actively manages the securities. B. An approved location, such as a clearing corporation or a qualified bank, where customer fully paid and excess margin securities are physically or book entry segregated and protected. C. Any third-party vault that offers high-security storage for physical certificates, regardless of specific regulatory approval. D. A location primarily used to store securities that are pledged as collateral for the firm's own borrowings. Answer B. An approved location, such as a clearing corporation or a qualified bank, where customer fully paid and excess margin securities are physically or book entry segregated and protected. Explanation: a good control location is an essential component of the Customer Protection Rule, SEC Rule 15C3-3. It is an approved location such as the Depository Trust Company (DDC), a qualified bank or a clearing corporation, where customer fully paid and excess margin securities are held in safekeeping. The key characteristics are that these locations are approved by regulators, ensure the segregation of customer assets from the broker-dealer's proprietary assets, and are maintained to ensure the protection and ready availability of these securities. This mechanism safeguards customer assets in the event of a broker-dealer's financial failure. Question 25. Which term refers to the process of transferring an uncertificated security by changing the ownership records on the books of the issuer or its transfer agent? Physical delivery. B. Street name registration. C. Book entry transfer. D. Reclamation. Answer: C. Book entry transfer. Explanation: book entry transfer refers to the process of transferring ownership of uncertificated securities by merely changing the ownership records on the books of the issuer or its transfer agent, rather than by physically moving paper certificates. The vast majority of securities transactions today are settled via book entry through depositories like the DTC, which eliminates the risks and inefficiencies associated with physical certificates. Operations professionals are deeply involved in managing and recording these electronic transfers, ensuring that ownership is accurately reflected and facilitating seamless settlement. Question 26. What is the role of a transfer agent in the securities industry? A. To execute trades on behalf of clients. B. To clear and settle securities transactions. C. To maintain records of stock and bond owners, issue and cancel certificates and process corporate actions. D. To provide research reports on various securities. Answer: C. To maintain records of stock and bond owners, issue and cancel certificates and process corporate actions. Explanation: a transfer agent is responsible for maintaining the records of all registered stock and bond owners for an issuing corporation, canceling old certificates and issuing new ones, and handling dividend disbursement and other corporate actions. They act as the liaison between the issuer and its shareholders, ensuring accurate ownership records. Operations professionals at broker-dealers frequently interact with transfer agents for tasks like registering securities, confirming ownership, and processing specific corporate actions, making their role integral to the back-office ecosystem. Question 27. What is the primary risk associated with a high volume of fails to receive? A. Increased market volatility for the firm. B. The firm's inability to deliver securities it has sold, potentially leading to a buy-in for the selling broker. C. An increase in the firm's proprietary trading profits. D. A reduction in the firm's regulatory capital requirements. Answer: B. The firm's inability to deliver securities it has sold, potentially leading to a buy-in for the selling broker. Explanation: a high volume of fails to receive indicates that the buying firm has not received the securities it purchased by the settlement date. The primary risk this poses is to the firm's ability to fulfill its own delivery obligations if it subsequently sold those same securities. This can force the firm to buy in the securities, meaning it must purchase them in the open market to fulfill its delivery, potentially at a higher price, resulting in a loss. Operations teams meticulously track fails to receive to manage these risks and ensure timely settlement. Question 28. Which of the following describes the operational concept of net capital for a broker-dealer? A. The total revenue generated by the firm in a fiscal year. B. The amount of liquid assets a broker-dealer must maintain to ensure its solvency and protect customers. C. The sum of all customer deposits held by the firm. D. The firm's total outstanding debt obligations. Answer: B. The amount of liquid assets a broker-dealer must maintain to ensure its solvency and protect customers. Explanation: net capital refers to the amount of liquid assets a broker-dealer must maintain above its liabilities to ensure its solvency and protect customers. This is a critical financial and operational requirement mandated by SEC Rule 15C3-1. Broker-dealers must calculate their net capital daily to ensure they meet the minimum required amount, which varies depending on the firm's business activities. Operations professionals, often in conjunction with financial and compliance teams, are responsible for monitoring and ensuring the firm's ongoing compliance with net capital requirements, which directly impacts its ability to conduct business. Question 29. If a customer mistakenly sends duplicate payment for a securities purchase, what is the operational procedure? A. The broker-dealer retains the extra payment as a service fee. B. The broker-dealer must promptly return the excess funds to the customer. C. The broker-dealer invests the extra funds in a money market account for the customer. D. The broker-dealer applies the extra funds to a future purchase without notification. Answer: B. The broker-dealer must promptly return the excess funds to the customer. Explanation: If a customer mistakenly sends duplicate payment for a securities purchase, the broker-dealer must promptly return the excess funds to the customer. Firms are fiduciaries of customer funds and cannot retain or arbitrarily invest surplus cash without explicit customer instruction. Operations departments are responsible for identifying overpayments through reconciliation processes and initiating the refund to ensure accurate account balances and compliance with customer asset protection rules. This ensures proper handling of customer funds and maintains trust. Question 30. What is the primary purpose of a FINRA Rule 4530 report? A. To report daily trade activity to the market. B. To report statistical information regarding a firm's financial condition. C. To report certain specified events, such as violations of securities laws or customer complaints. D. To report a firm's cybersecurity readiness. Answer: C. To report certain specified events, such as violations of securities laws or customer complaints. Explanation: FINRA Rule 4530 requires broker-dealers to report specified events, including certain violations of securities laws, customer complaints alleging theft or misappropriation of funds, and disciplinary actions taken against associated persons. This rule ensures that FINRA is kept informed of significant issues that could impact market integrity or investor protection. Operations and compliance teams are responsible for identifying reportable events and ensuring timely and accurate submission of these reports to FINRA, demonstrating the firm's adherence to regulatory obligations and fostering transparency. Question 31. Which of the following is a key component of a broker-dealer's internal control system relating to trade processing? Allowing unrestricted access to all trading systems for all employees. B. Implementing clear segregation of duties between front office, trading, and back office, settlement, functions. C. Encouraging verbal confirmations of trades without written documentation. D. Processing all trades manually to avoid technological errors. Answer: B. Implementing clear segregation of duties between front office, trading, and back office, settlement, functions. Explanation: A key component of a broker-dealer's internal control system relating to trade processing is implementing clear segregation of duties between front office, trading, and back office, settlement, functions. This separation helps prevent conflicts of interest, reduces the risk of errors, and mitigates the potential for fraud. For example, the individual executing a trade should not be the same person responsible for its settlement and record-keeping. Operations professionals play a crucial role in establishing and maintaining these internal controls to ensure the integrity of the firm's financial processes and safeguard assets. Question 32. What is the operational implication of a stock split? A. It requires a reduction in the par value of the outstanding shares and an increase in the number of shares. B. It requires an increase in the par value of the outstanding shares and a reduction in the number of shares. C. It only affects the stock price, not the number of shares outstanding. D. It results in a cash distribution to shareholders. Answer: A. It requires a reduction in the par value of the outstanding shares and an increase in the number of shares. Explanation: From an operational perspective, a stock split, e.g. 2-for-1, typically involves a reduction in the par value of the outstanding shares and a proportionate increase in the number of shares outstanding. For example, in a 2-for-1 split, a shareholder's 100 shares become 200 shares, and the price per share is halved. Operations departments must accurately adjust customer accounts to reflect the new share count and, if necessary, process any fractional shares. This process is critical to ensure customer holdings are correctly updated and to prevent discrepancies in the firm's stock record. Question 33. When a broker-dealer receives a customer complaint, what is the primary operational responsibility? A. To immediately deny the complaint and close the case. B. To forward the complaint to the firm's sales department for resolution. C. To record the complaint, investigate it thoroughly, and provide a timely response to the customer. D. To only address complaints involving financial losses. Answer: C. To record the complaint, investigate it thoroughly, and provide a timely response to the customer. Explanation: upon receiving a customer complaint, the primary operational and compliance responsibility for a broker-dealer is to record the complaint, investigate it thoroughly and impartially, and provide a timely and appropriate response to the customer. FINRA rules mandate specific procedures for handling customer complaints, including record retention and potential reporting requirements. Operations teams are often involved in gathering relevant transaction data and records for the investigation, ensuring the firm adheres to regulatory obligations and aims to resolve customer issues fairly and efficiently. Question 34. What is the general requirement for broker-dealers regarding the safekeeping of customer securities? A. All customer securities must be kept in the firm's proprietary trading account. B. Customer fully paid and excess margin securities must be segregated from the firm's own assets. C. Customer securities must be held by the customer directly, not the broker-dealer. D. Only cash held for customers needs to be segregated, not securities. Answer: B. Customer fully paid and excess margin securities must be segregated from the firm's own assets. Explanation: a general and fundamental requirement for broker-dealers, particularly under SEC Rule 15C3-3, the Customer Protection Rule, is that customer fully paid and excess margin securities must be segregated from the firm's own assets. This means they cannot be commingled with the broker-dealer's proprietary holdings or used to satisfy the firm's obligations. This segregation is critical to protect customer assets in the event of the broker-dealer's financial failure. Operations departments are responsible for establishing and maintaining robust systems and procedures to ensure this strict segregation is always maintained, a cornerstone of investor protection. Question 35. Which system is used by FINRA to monitor the activity of broker-dealers and provide audit trails for regulatory purposes? A. B. Trace. C. OAT. D. ACAT. Answer: C. OAT. Explanation: the Order Audit Trail System, OATS, is a system used by FINRA to monitor the activity of broker-dealers and provide a comprehensive audit trail for regulatory purposes. OATS captures order, quote, and trade data across the life cycle of an order, allowing regulators to reconstruct market events and ensure compliance with rules such as best execution and anti-manipulation. Operations professionals are responsible for ensuring that their firm's systems accurately report all required data to OATS in a timely manner, which is crucial for regulatory oversight and market integrity.